down a little bit. All right. I'm going to get rid of this. Hello, good morning. I'm wondering, I'm just futzing around with some stuff here on these little screens. Good morning, hello. As you all know, if you hit the screen a whole bunch really early on in the live, it brings in a lot more viewers. A lot more viewers mean a lot more of a lively live. I'm here to answer your questions about the stock market. Hi, Miss T. Your questions about the stock market, investing, day trading, swing trading, ETFs, dividends, whatever you want. And if I don't know it, I won't answer. And I'll send you to someone who does know. Let's see. Who's this? What's going on in here? I saw a headline this morning that Warren Buffett was trimming some of his Apple stock. But, you know, the truth is when he starts selling his Apple stock, he's not just going in and selling 1 million shares today. He's probably been doing this very slowly over an extended period of time. So as to not impact the stock too much would be my guess. But let's see here what it says here. He says that his investment has grown to an outsized share of his portfolio. This is something we actually talk about here a lot, rebalancing your portfolio when you are overweight one particular thing. And in this case, for Warren Buffett, he was overweight Apple stock. In other words, he had too much Apple stock. And he said, I got to cut back on some of my Apple. And that's what he did here. Let's see if we can find how much. He sold about 1% of his, Berkshire sold about 1% of its Apple shares in the final 3 months of 2023. See, what I was saying is they probably trimmed down their positions, and that's what he was doing, leaving it with a 5.9% stake worth about $169 billion. So not a big deal. Is it time to sell tech and NVIDIA too high? That is a decision only you can make. I can't tell you what to do with your money. I'm holding my NVIDIA. I'm not selling mine. Let's say you bought 100 shares or 1,000 shares or however many shares you bought a year or 2 years ago, and you're now sitting up 300 or 400 or, I think it's up 200%. Let's say you're sitting up 200 or 300% depending on when you bought it. If you're saying, I'm worried, I think it's overvalued, I think these stocks have run too much, I think they're going to pull back, which it very well could, one option would be for you to trim your position, just like Warren did. You don't have to come in and cut your whole thing. If you have 100 shares, you don't have to sell all 100. You can sell 25 or 50 or 100 if you have 1,000. You can sell 250, whatever you want to sell, to hit some profit and not sell your whole position. But that's a decision only you can make. Let's see here. A lot of people are joining. Not a lot of people are asking questions. I'm in a few stocks, and Microsoft was really good for me last year. Microsoft did go up about 50% last year. Let's see what it's doing this year. Microsoft, Apple. Microsoft year to date is up almost 9%. Last year it went up 50%. In the last 5 years it went up 283%. In the last decade it went up 978%. Pretty good. You compare it to Apple, that went up, let's see here, 881%. So Microsoft outperformed Apple over the last decade. But I love Apple. I hold Apple. I own it. Apple is one of those stocks that in my portfolio, at least, that's a never sell. I'll probably hold it forever. It's 182 right now. It's down about 1%. We were just talking about how Warren Buffett has unloaded some of his position. He trimmed back, but he did it in 2023. So people who are seeing it now are reacting now to something that's already happened. He sold it, and he probably paced his selling. He probably didn't come onto the market and say, I'm going to dump 1 million shares on the market or whatever. He kind of walks out and goes, all right, sell a little today, a little tomorrow. He's unloading it slowly so as to not cause panic on the stock. It seems tech is a safe play. Why should we diversify to non-tech? Why should you? For the sake of diversity. Tech is on fire right now, but it won't always be. These things move in cycles. Tech is having a huge boom right now because of excitement due to cloud, AI, smart technology, semiconductors, wearables. There's a huge surge in wearables. and in smart technology. I mean, refrigerators are smart technology now. You know, cars have smart technology built in, everything, and it's only going to get more and more. So it's on fire right now, but there will be periods where it pulls back. There will be recessions. When recessions happen, tech gets hit hardest the first. And then you have your portfolio to insulate you from recessions by investing in stuff like Johnson & Johnson and Procter & Gamble and McDonald's and large cap stuff like Coca-Cola. No, I don't think it'll collapse, but it could be a bubble, and we could be in the bubble right now where, like COVID, where everything was extremely overvalued. You had Etsy, Peloton, Shopify, all these, Zoom, the video conferencing, all these businesses were on absolute fire. Even Instacart and the delivery services were huge. It was a bubble. It popped. Everything came back down, but they didn't go away. They're still here. S&P can go down to 3,000. It can, but I doubt it. It's 5,000 right now. And yeah, we are sitting at all-time highs. It could go to 3,000, but I'm not going to sit there not investing and waiting for it to go down to 3. In that time, it could go up to 6, and then it could drop to 5. You know what I mean? Which is where it is right now. So the people who sit there saying, oh, time it, wait, are the ones who miss out. Just start dollar cost averaging, and a little bit at a time. And if you're right and the markets do go to 3,000, that is an opportunity of a lifetime to swoop in and buy as much as you can. I like Meta too. I do too. Can you do an old-fashioned deep dive on Altria? Well, too much of a deep dive on one stock will take a lot of time. I have done some here on this channel, breaking down their earnings and the revenue. I can tag you when this live is over. But I do love Altria. And I don't even really worry that if you're ethical and you don't want to profit off of tobacco, then stay away from Altria. If you don't care, it pays a 9% dividend. They have a dividend safety grade of B-. They've grown their dividend every single August for 54 years. That's incredible. But it's not guaranteed. I mean, we just saw Walgreens, 48 years of dividend raises every single year, and they cut their dividend by 48%. Let's see here. Hey man, I've been looking at this company called ES, lots of growth potential. Eversource Energy, it's $58. Their grades are not great. They have a valuation of B-, which means they're fairly valued. Growth is C-, profitability is D+, momentum is C, revisions are D+. They have a dividend of 5%. However, this is probably because the stock has been in free fall. Last year it went down 26%. In the last 5 years, it went down 17%. In the last decade, it's only up 30%. It is electric utilities. And we can look and see what the analysts think about a 1-year price target. Analysts aren't predicting anything. They're not making a guarantee when they make a price target. They here have a 1-year price target of $61. That's a 6% move to the upside for this Eversource Energy. The lowest price target is 50. The average is 61. And the highest price target is 72. There are only 11 analysts covering the stock, which gives me pause when I don't see 30 analysts covering a stock. Gives me a little bit more peace of mind that a lot of analysts are looking in on the same thing and they're bullish or they're bearish or they hate it or they love it, whatever. There's only 11. Of those 11, 1 recommends you sell it, 2 recommend that you buy it. The other 8 give it a hold, which means if you already own it, you don't sell it, you don't buy more, you just hold what you have. It's interesting to me. They have a dividend safety grade of B+, so at least financially speaking, the dividend isn't at high risk of being cut, but the stock has fallen a lot. It's $58 a share. It's not a penny stock. You would have to look at their earnings, you would have to look at their revenue, which seems to be doing okay. 13 billion. They did 11 billion last year, almost 12. They're estimated to do 13.23 in 2024 and then 13.78 in 2025. So the revenue's climbing. But I don't know if I would consider an electric utility company to be a growth company. It might be one that has slow and steady. They pay a dividend, they get their customers. Do you listen to any of those CNBC analysts? Do you take their advice? Absolutely not. I almost never listen to CNBC. I used to have it on in the background when I was trading stocks full time, and the reason that I had it on in the background when I was trading stocks full time is because I would get ideas for stocks to trade. So they would be like, breaking news, this stock is surging, and I would go like, oh shit, and I would jump in and make a very quick trade. I would call it like a scalp. I'm in, I'm out in 10 minutes, just to ride that little burst of momentum that you would get from a CNBC analyst talking about a stock. But I don't they're in the entertainment business, right? They provide news and they share information, but mostly CNBC is about shock value, and ratings. So I don't take too much of what they say seriously. Sometimes I'll put it on if I'm curious or I want to see an interview with someone. I'll watch. But you'll notice that they'll bring on a guy and he'll say, I love this company. I'm super bullish on this company. Here are the 5 reasons I love it. And then and then after the commercial, they'll bring on someone who says, I hate this company. Same one. It's a terrible company. Here are the 5 reasons I hate it. So they're trying to be, I guess, fair and balanced, but they're all pushing their own agenda. And usually these analysts own the stock that they're coming on the news to promote or short. So I'm weary about it. Do you like AMD? Yes, but I don't own it. How about investing in Chinese stocks? Not a big fan. Their economy is in the shitter right now, number one. Number two, they don't have the same standards when it comes to earnings reports and disclosing information. You can remember one called Luckin Coffee, which a couple years ago was like the Chinese Starbucks. They were expanding rapidly. They were making so much money. And then it turned out, because they don't have a system like we do here where they have to report earnings quarterly and they have to share their forecasts and their growth, and they have to share all their revenues and their accounting. None of that has to be shared, or at least it's not as strict. And then it turned out that the whole thing was a lie, and the stock cratered. What can Coinbase go up to? I don't know. I mean, I don't have a crystal ball. Coinbase is currently 170. About a year ago, well, let's see here. In 2021, it was 346. So it has come down considerably from 346. Actually, 353 looks to be one of the all-time highs in the 360s or 350s. Now it's 170. I think once this Bitcoin ETF came onto the market, it sort of slowed things down a little bit. Once you have all the big hedge funds coming in with their tons and tons of money, it makes it a little less volatile, crypto. It adds a level of legitimacy to it, though, so that's good. But the insane growth, I think, cools down a little bit. And I think it was a buy the rumor, sell the news. Everyone was rushing into Coinbase stock ahead of the Bitcoin ETFs. As soon as they came out, the stock tanked. It could just level out here and hang out in this level. In the what did we say it was? 170s? Yeah, 170s. Analysts have a 1-year price target of 133, so down 21%. So I'd be kind of careful with Coinbase. They're not just $35 billion in debt, unfounded liability. I don't know what that's intention to. I'm in heavy in ASAN, looking for more parabolic move to $100 this year. ASAN. And by the way, for everyone who's in here, if you ask a question, don't leave. That's why I say it down there. Don't leave. I'll answer you. I try to answer everybody. ASAN is not loading. Let me just see what's up. Okay, here it is. It is $19 a share. Year to date, it's only up 3%. Last year, it went up 24% from 15 to where it is now to 19. So little growth. During COVID, it hit 136. Now remember, you're saying you think it's going to go back up to $100, which is where it was during COVID. It was in the 130s. Just because a stock went up to a price in the past does not guarantee that it will do the same again. I don't know what this company is. Application software, information technology is what they say. Operates a work management platform for individuals, team leads, executives in the United States and internationally. It helps organizations to orchestrate work for daily tasks. I'm very sorry. I hate having a runny nose, but I am very allergic to dogs, and we are dog sitting. I hate being the guy blowing my nose on camera, but I don't know what to tell you. The company serves in various industries: technology, retail, education, nonprofit, government, healthcare, hospitality, media, manufacturing, professional services, and financial. So they do an awful lot. And the revenue is climbing. Look at this. From 2021, they made $227 million. In 2022, $378 million. So huge jump. In 2023, $547 million. From 378 to 547 is huge. In 2024, they're expected to go from 547 to 649 million. And then in 2025, 716 million. So this is still a growing company, which is pretty interesting. They've only been public since 2020, and in that time, the stock is down 23%. This might be an interesting company here. I mean, no guarantee that it'll go back up. Just because it hit 100 once doesn't mean it'll hit 100 again. The analyst 1-year price target on Asana is $20, and it's currently 19. The highest 1-year price target is 28. If NVIDIA misses earnings, it will bring down the tech sector. I would agree with you. And by the way, for people who don't know, that's called trading in sympathy. So when you saw like yesterday, Lyft came out with their earnings, or 2 days ago, and even though they made a really embarrassing typo in their first press release where they said that their profit margins were up 500 basis points, it was actually like 0.5. It caused the stock to surge and then dump. And then once they realized what was going on, they still looked at the overall report and they're like, oh, this is actually still pretty good. The stock did go up, and Lyft ended up going up, I think, 20% yesterday, and Airbnb went up 14% as well, even though it was Lyft who had the strong earnings. That's because it was trading in sympathy. So it's entirely possible. Rivian today is, what is Rivian today? Is that their earnings are coming out? Let's take a look. I can close this. I don't know if Rivian's earnings are out today, but they could be. 221 next week. I like Rivian. Trading into earnings is extremely volatile, especially with a highly speculative company like Rivian. Lucky you have TKO. Thought WWE was going to rock bottom. I like it. Speaking of rock bottom, The Rock is going to be on SmackDown tomorrow. What do you think about electric car ETF? I mean, it's a very niche ETF, and I don't know what the one you're talking about is. Let's see here. There's one called iDrive, IDRV, I think. It's self-driving EV and tech. It's $31. It's down 23% last year. I feel like these funds are putting a lot of money in a lot of losers, and there's only really a few electric vehicle companies that are kind of leading the way right now. Tesla, Ford, maybe Rivian, that are publicly traded in like a big way. I don't know what else they have. Probably NIO, Fisker. I mean, they probably just own everything. They have something called Schneider Electric, which I've never heard of, Volkswagen, ABB, Renault, Porsche, Denso, Filbaro. These are all foreign companies, by the way. Denso, I can't even click on. Porsche, I can't click on. ABB, I can't click on. Volkswagen, I can't click on. It says Volkswagen participating preferred. I don't even know what that means. Pilbara, never heard of. It's minerals. LG Energy Solutions, I can't click on. It's not opening to a stock page. So a lot of what this company holds doesn't seem to be tradable here in the States, or they are investing in, let's see what it says here. Invest in stocks of companies operating across vehicles, electric vehicles, batteries, or technology. It invests in growth and value. I don't know. I think you're putting a lot of your money in stuff where a lot of stuff underperforms and is garbage. It might be a better bet for you to just pick a couple electric vehicle companies you like as a very small part of your portfolio for speculation. Every time I saw an article putting Meta down, I threw another $100 at it. That's not a bad strategy. Usually when they're dumping on something, it's and the escalation of hating on a stock increases. It kind of means that they're at their end of their road and it'll bottom out and then turn around. Someone just did this recently with something else. Maybe it was Meta. I can't remember what it was, but it was like when everyone is screaming the recession is coming, then it's probably already over, or it's just not going to happen. And that's what we saw last year. Everyone on the news coming out, recession, it's happening, 2023, oh no, and it never happened. Markets went up. Doesn't mean that a recession won't happen this year or next year. I actually saw a report that said the UK officially entered a recession today. What is a reasonable or realistic percentage gain to have on an account every month? I don't know. It depends on what you're investing in. Every account's going to be different because every investor has a different portfolio. You could be heavy in tech, and tech is on fire right now. So you could have a disproportionately high level of gains. I guess what I would do is use the S&P 500 as my measuring stick or my metric to compare to. Year to date, it's up 5%. Last month, it's up 5%. Well, it's up 5% this month, but it doesn't mean that it's going to go up 5% every month. Markets, it's like a wave. They fluctuate. So I wouldn't be so worried about. I have to have a realistic gain every single month. You're going to have months where you have a loss. You're going to have months where you have big losses. Don't worry about month to month. Don't drive yourself crazy. If you buy an S&P 500 index fund today and it drops 5% next week, don't freak out. The world's not ending. You'll be fine. You're not really buying these for month-to-month gains unless you're a trader. Just think about the next 20, 30 years. I also invested in Meta. I love that. What is your percentage? Or what is your price or target for Kava? I don't make targets or price targets. I'm not an analyst. My opinion doesn't really, I don't make predictions, because if I came out and I said, I think Kava will be at this price by next year, and I was right, then I would get 100,000 followers, and they would all be saying, what do you think about this one? Where do you think this one's going to go? And I'm not in the prediction game here. I'm not just making random guesses. The analysts, which is what I go off of, have the 1 year price target of $54, and it's $55 right now. So it's already blown past analyst expectations. Kava is up a lot this year. I'm up, let's see here, Kava, where's my Kava? I got to go over to my portfolio. I'm up 25.5% on Kava already. I bought it on IPO day. Year to date, it's up 29%. Since going public, it is up 45%. I've been averaging into my Kava shares, so my combined is 25, but let's see. I'll click on Kava. Here comes Robin. Hello, goodbye. She doesn't want to be on camera. I'm up 44% on some, 57% on others, 77% on some shares. I don't have a loss on any shares in Kava at the moment, which is great for me. Thoughts on SoFi and NU. So NU is one that Warren Buffett has invested in a lot. Robin's getting the zoomies. Year to date, it's up 92. No, I'm sorry. In the last 12 months, it's up 92%. This year, it's up 21%. It's a Brazilian online bank, which apparently is very needed in Brazil. Let's see if there's a 1 year price target. And the other question was about SoFi, which I love. I own SoFi. I think long-term it's going to do very, very well. They are also an online bank. And the thing I like about SoFi is no physical locations mean they keep their overhead very, very low. They're not Bank of America, who has 5,000 banks or whatever they have. NU has a 1 year price target of $11, and it's 10 right now, so not a lot of growth behind it. And SoFi has a 1 year price target of, let's see, $9.13, which would be around 7% or almost 8% from where it is currently. It's $8.47 right now. There are 16 analysts covering SoFi. 4 recommend you sell it, 4 recommend you buy it, and 8 recommend you hold it. So it has a hold rating overall, which means if you already own it, just hold it. That's what they're saying. They're saying don't sell it, don't buy more, just hold it. And I don't think we did that for NU. There are only 5 analysts covering NU, which gives me pause. 5 isn't a lot. 3 recommend you buy it, 2 recommend you hold it, 0 recommend you sell it. I'm heavily, read that one. I've lost money in NEO. Yeah, I stay far away from Chinese electric vehicle companies. They can fudge their numbers, and they don't really have any sort of accountability. I mean, maybe they have some, but not as strict as we have. NEO is down 40% year to date in the last 12 months. I mean, year to date, it's down 31%. I view companies like that. Anything that's a new company that promises to change the world or have a lot of growth potential, initially, I view it as speculative. And maybe I invest in it, like I have Rivian shares, I have Lucid, but I only put in what I'm willing to lose. That way, if they turn out to be a dud, like ChargePoint, which I also own a little bit, I'm down 84% on ChargePoint. but I have such a small amount of stock that it doesn't really bother me. I don't care. Jim Cramer, do the opposite of what he says. This is funny, and a lot of people say do the opposite of what Jim Cramer does, but there are actually two funds run by the same company. It's called Tuttle Management. Tuttle Management has one fund called Short Jim Cramer, which means bet against it, and another one called Long Jim Cramer, like buy and hold for the long term. L Jim is the long one. Oh no, it's defunct. They no longer have it. Did they get rid of S-Gym too? They closed them. That's so funny to me. Probably because their expense ratios were insane. But anyway, the point of it was this company would buy everything that Jim Cramer was recommending you buy and shorting everything. They were doing the opposite. What was it? What was the thing here? I guess they were just comparing the two. They would do one where they would buy everything, and they would do it one where they would sell the exact same thing. And he outperformed, right? The long Jim Cramer one, which was saying buy what Jim Cramer is buying, actually outperformed. So it counters the argument to bet against everything he says, because they also had one that said, okay, we're going to have one that bets against everything he says. And that one lost money. It went down. I can see it here. It lost about 8%. Long Jim actually did go up a little bit. But it's been delisted, so that's a bummer. Tom Segura, no. What is the difference between yield and dividend? The yield is the percentage amount that they pay out, and the dividend is how much money you get through the company's profits. So the company says, oh, we make all this money, we're going to give you a dividend, and it will be 2% of our profit or whatever like that. And I'm sorry, it'll be 2% of our overall stock price. So that's what the yield is. When you see, let me see here. When you see Coca-Cola, their dividend is $1.84, which is 3.10% of the stock price currently, which is 5.49. So the company picks a dollar amount that they want to give. That never changes unless the company changes it. So if the stock goes up, if the stock goes down, oh, I'm sorry, I read the wrong thing. Their dividend is $1.84. Their yield is 3.10. So $1.84 is how much the company decides we're going to pay. Oh, maybe I did say it right. I'm confusing myself. $1.84 is 3.10% of the current stock price, which is $59. So the company comes out and says, we're giving you $1.84 per year. If they cut their dividend, if they raise their dividend, that is the only way the dollar amount changes. The percentage amount, however, will change every day. So if the stock drops in price, then the percentage yield will go up, because $1.84 suddenly becomes a higher percentage of the stock price if the stock price is 40, 30, 20. And if the stock price goes higher and higher and higher, the percentage will drop. But the dollar amount stays the same. It's just further away from the price of the stock. So that's what the dividend and the yield is. When is it a good time to sell Sony and Google? Couldn't tell you. That's your decision. Why did you buy it? Did you buy it with the hope of a quick profit, or did you buy it with the plan of holding it for 20, 30 years? What's a good buy for the long term? Index funds. Agreed, needs more analysts. Macro picture is horrible. Well, it depends. I mean, some of the macro news is okay. We have more people working now than ever. Inflation, though, hard to get under control. So it's a mixed bag. Okay, I'm going to drop down to the bottom and I'll work my way back up. Can't lose with the Pelosi trades. Her husband actually is the one doing all the trades. Maybe he's getting information from her, but he's the one doing all the trades. And actually, it's not true. There are several Republicans who have outperformed Nancy Pelosi. There was a chart a year ago. I don't know where I could find it. Let me see if I can find an image here. Okay, here's the, where's Nancy Pelosi? Okay, here it is. This is from 2021, so this is the only thing I can find that's outdated. Austin Scott was number 1, Republican. Brian Mast, number 2, Republican. French Hill, number 3, Republican. John Curtis, number 4, Republican. Dan Crenshaw, number 5, Republican. He's the one, I think, with the patch. Number 6, Nancy Pelosi, Democrat. So she's 6th best trader. Sixth is hard to say. But she's number 6. 5 are better than her, and they're Republican. DocuSign. I don't know too much about DocuSign. And by the way, there is a website called, what's it called? Capital Trades or something? Yes, Capital Trades, capital, I hope you know with an O, not an A. Capital Trades is a website which lets you see who's trading what. You can click on and search by politician. You can see, so I clicked on politicians. Max Miller comes up number 1 as a Republican from Ohio. Then Bill Keating, a Democrat from Massachusetts. Then Ro Khanna from California, a Democrat. Kathy Manning, Democrat from North Carolina. Kevin Hern, Republican, Oklahoma. Overwhelmingly on their homepage, let's see, 1, 2, 3, 4. There are 12 listed on their homepage. Only 4 are Democrat. But I don't know if this is some sort of ranking, if it's like ranking from best to worst. I don't really understand. You can also search by by party, Republican, Democrat, other. You can also search by committee, like agriculture, appropriations, armed services. You can also search by state, by issuer, so by company, Microsoft, Amazon, Apple, and see who owns what. Let's see here. 440 of the politicians invest in Microsoft. 245 invest in Apple. This is funny, actually. Anyway, that wasn't your question. Your question was DocuSign. DocuSign down 21% in the last 12 months, down 13% in the last year to date, so since this year. Even though it's down, it has a strong buy rating from the analysts. Let me go on here and see the 1-year price target is $58, so around 14% move to the upside, according to the analysts, who are right about 30% of the time. By the way, it doesn't mean that they're wrong the other 70%. It just means that they didn't hit their exact target. So the exact target is 58.80, as an example. If it hits 57, they're wrong, but they still saw gains, or they can be flat out wrong. It's currently $51. 1-year price target of 58. The highest price target is 90. The lowest is 44. There are 18 analysts covering it with an overall hold rating. This is from Toady Virtual. Can you recommend companies that pay dividends to buy today? I have playlists on dividends. I have playlists on dividend stocks, dividend ETFs, covered call ETFs, pay every month, real estate investment trusts. I have a playlist on those as well. I don't know how many people are familiar with the fact that TikTok has playlists. If you click on my homepage, it's a scroll right between my bio and my videos. There's a little scroll at the top, and you can scroll side by side and find all my playlists. I spent hours categorizing all of my videos. I've made 5,000 videos in the last 4 years that I've been on TikTok. 5,000 videos, and almost all of them are put away in different playlists. So there's one on ETFs, there's one on dividend stocks, there's one on real estate investment trusts, there's one on covered calls. These are all dividend paying stocks. But when you say, can you recommend companies that pay dividends to buy today? I don't know if you mean, I guess my question is, why today? What do you mean? Do you mean companies that are paying dividends today? You would search by something called an ex-dividend date. You have to own the stock before that date. If you buy it on the ex-dividend date or after, you won't get that most recent dividend. Hi, Kenneth. Would love to hear your thoughts on Super Micro. I'm sitting this one out. It went up 600, 700. Let's see here. It is up 936% in the last 12 months. Even if it goes up another 200% from here, I'm not willing to take that risk. I'm not chasing something that's gone up so absolutely massive. It's up 239% just this year alone, and we're in the middle of February, so we're only a month and a half into the year, and it's up 239%. That is terrifying. If I had purchased this stock a year ago at $92 and it's almost $1,000 today, I would be selling almost everything and taking those big gains. When you're looking at it now at $936, how many shares realistically are you buying? It's $936. It's almost, let's just say it's $1,000. You're gonna get one share. So what? It goes from 1,000 to 1,100 or 1,200. You've made $200. Not to say that it's not a lot, but there are better investments out there that I'd rather put my money that have less risk right now. Trying to get used to the Charles Schwab platform is crazy. My account still hasn't moved over it. My account is moving over in May. Pelosi trades are NANC, yes, and also KRUZ is, well, hold on. Nancy isn't Nancy Pelosi's trades. It's the Democratic trades, just to clear up. It's all Democrats. It's not just Nancy. It's called Nancy. And Ted Cruz, the KRUZ one is KRUZ, even though his name is CR. KRUZ, KRUZ is Ted Cruz, but it's not really just his trades. It's all Republican. So let's see. Nancy is up 29% in the last 12 months, and KRUZ is up 12%. Ha. Why is NNOX raising so high? NanoX Imaging. It's up 58% today. Probably like strong earnings or something like that. I don't know. I've never heard of this company. NNOX. Okay. Nanox shares are trading higher after NVIDIA reported a 59,632 share stake in the company. So whatever this NanoX imaging company does, which says healthcare and providers based in Israel, it's up 60% today because of NVIDIA. NVIDIA is investing in this company, buying stock in this company. Interesting. ADM, Archer Daniels Midland, that's farming and agriculture, right? It's down 33% in the last 12 months, which is a bummer. It's also down 25% year to date. So this stock is in a downtrend. Over the last 5 years, it's only up 28%. Over the last 10 years, it's only up 35%. The grades aren't great. Valuation is A+ because it's lost so much value. Growth is D-. Profitability is B. Momentum is D-. Revisions is D. It has a dividend. It has a dividend safety grade of B+, and they've grown their dividend for 30 years. So as a dividend investment, maybe because it's beaten up so much right now, you might be able to get in at a good low price. But I feel like there are better stocks out there. What is the ticker? I'm sorry, I don't know what that was about. Is averaging down a good thing in Altria? I can't answer that for you. It's going to be different for every investor and your reason for investing in the company. It is down 15% last year. They offer a 9% dividend. In the last decade, the stock is only up around 14%. So Altria is not a massive growth company. As a part of a diversified portfolio that pays dividends, I like it. But I wouldn't be the kind of investor who puts everything all into one individual high-paying dividend stock. Is too high risk for me. I'm not reinvesting or dollar cost averaging or averaging into Altria, but I am reinvesting my dividends. So in a way, I'm averaging in. Every time I get a dividend and the stock is down, it's getting me the shares at a lower price. I like Altria. I think people are worried that there are less smokers, but I think that might be just here in the States. You go overseas, people smoke everywhere. They have a 1-year price target of $41, which is up 3%, almost 4% from where it currently is. The highest price target is $50. There are also 2 analysts who have a sell order on it, and it's $36. Coco, you are asking about Lucid. Lottery ticket. I wouldn't put in more than I was willing to lose. Super high risk. I would treat Lucid just like I would going to 7-Eleven and buying a lottery ticket. It is $3.55 right now. If I said to you there's a pretty good chance that this stock loses 80% of their value in the next 12 months, how much are you comfortable putting in as a risk to lose? That's the way you should be phrasing it. I think people look at stocks that are $3 and they think, how much can I make? But they never think, what am I willing to lose here? In the last year, the stock went down 68%. This year alone, it's down 16%. There is a 1-year price target of $5, which would be a 45% move to the upside, but that is based on like a handful of analysts. There are 8 covering the stock. 1 says sell it, it's going to $1. 7 say hold it with an average price of $5. The highest price target is $7. Currently, there are no buy ratings on the stock, so I would just be very cautious with something like that. Am I Jewish? What does that matter? Is SMCI the next NVIDIA? I would say they're bigger than NVIDIA. I mean, NVIDIA, let's see here. NVIDIA this year went up, or let's go last year. Last year, NVIDIA went up 218%, and Supermicro went up 940%. So an insane gain for this company. You know, I don't chase anything that's this much, that's had this much growth in such a short period of time. Makes me very nervous. I would hate to see someone buy it and then get absolutely wrecked. Their 1-year price target was $646, which they've blown past. Their highest price target is $961, which they've also just recently blown past today. Their 1-year price target was $961. Today, the stock is up $84 to $965. So they've just blown past their highest price target, which means that the analysts will probably sit down and recalculate their numbers to see where they think this thing could go. But anything up that much makes me nervous. Tesla, is it a dip or just sell and run? Can't answer that question for you. It's totally up to you. If you are more bullish on Tesla, if you think that the competition doesn't matter, and if you think that Elon is not distracted with Twitter or X or whatever, then maybe. I think there's too much competition right now, and that's going to eat into their share. Max on my Roth this year, heavy on SPLG and SCHD. I have $2,000 left to invest. What would you do? It doesn't matter what I would do because it's not my money, but if you've already got the two that I like, SPLG and SCHD, I would look into either tech or a real estate investment. It depends on what your goals are. So it looks to me like you're covered with the broad diversity, and SPLG pays an okay dividend. You've already got the dividend with SCHD, so a real estate investment trust pays monthly, but maybe you feel like you're covered on dividends and passive income through SCHD. So maybe an option for you wouldn't be realty income, but maybe you would look into something like VGT or QQQM, which has more exposure to tech. How many hours a day do you watch the markets, and do you recommend Yahoo for news? I think any news website is fine as long as you are able to kind of like dissect what's going on behind the scenes. A lot of these analysts who write articles own the stock that they're telling you to buy. So I would be a little weary. But, you know, at the end of the day, you look at what you look at and you make your own decisions from there. I like Yahoo News. I think it's fine. How many hours a day do you watch the markets? I mean, it's my job, so all day. Is Lucid going broke? I don't know. Maybe, but I would only treat it very, very speculatively as an investment. CHNR, China Natural Resources, $5 a share, up 400% today. I'd be very, very weary. What do you think about the BOTS ETF? I like it as a part of your diversified portfolio. I wouldn't necessarily go in. I mean, it's ultra niche, right? It's just focusing on artificial intelligence and robotics. So everything that they invest in is all focused on one sector. They only hold 45 companies. They have a pretty high expense ratio. It's 0.69%. Anything over 1% is considered high. BOTS is 0.69. They don't pay a dividend, which you would assume that they wouldn't when most of the companies they're investing in is high growth or high growth potential. It's up 24% last year. In the last 5 years, it's up 53%. Since going public in 2016, it's up 97%. So it has okay growth. Their top 10 holdings are NVIDIA, Intuitive Surgical, ABB, Keyence, Fanuc, UiPath, Dynatrace, and then a couple of, I'm guessing, Japanese companies that I've never heard of. As a small part of your portfolio, if it's something you're really bullish on and you don't want to buy individual stocks, sure. How about ASML? This is for Miss T. Hello, Miss T. ASML. Oh, by the way, Miss T, you asked about a company the other day that I had never heard of called XPO, a trucking company. I think it was XPO. You asked about XPO, and we actually mentioned you in our car ride when we were driving from DC to Georgia because I saw 2 XPO trucks on the highway, and I went, oh, Miss T told me about this company. It is up. Well, you weren't asking about XPO. ASML is up 36% last year. Year to date, they're up 22%, which is pretty good. They have a dividend of 0.71%, but it's almost $1,000 per share. So you wouldn't expect the dividend to be huge. And you don't really need a 2 or 3% dividend if the stock is going up. In the last 5 years, it's up 402%. So what's a 2% dividend? You know what I mean? In the last 10 years, it's up 941%, which is massive. They are a semiconductor materials company. Let's see. You know, anytime I see a company that's over $1,000, it makes me a little weary, just because one little bit of bad news and that thing could come tumbling down. Let's see here. I'm trying to find their valuation. So their price to earnings ratio is 45 times earnings, which is high, especially when you compare it to the sector average of 25 times earnings. It's saying that ASML is a little bit overvalued. NVIDIA is 59 times earnings. So NVIDIA is even more overvalued than ASML. And I think we said, we looked at their 1 year price target. It's minimal. It's currently 925. The 1 year growth, or the 1 year price target, is 936. So it's about 1%. The highest price target is 1,050. Okay, I'm scrolling down to the bottom, and I'm gonna work my way back up. ASML is what we were talking about right now. XPO, yes, you got it. Is it the right time to buy Tesla? I can't answer that question for you. Only you can answer that question. It depends on what your thoughts are on the company. You have to do research here. You can't just ask a stranger on the internet, what do you think? Everyone's gonna have a different opinion. I think there's a lot of competition. I think Elon is distracted. I think we have to wait and see what Donald Trump does if he gets reelected. If he gets reelected, he's cutting all this green energy stuff. And a lot of these companies, probably Tesla included, depend on that infrastructure for their charging stations. Biden wants to put 500,000 on the road by 2030. I'm sure Tesla will stand to benefit a little from that as well. The more chargers on the road, the more prone people are to buy an electric vehicle. I think a lot of people right now look at electric vehicles and go, I don't want one of these things because I live in the middle of nowhere and there's no chargers out here. And then they have range anxiety. So, you know, I think it's wait and see for Tesla right now. It's down 7% last year. This year it's down 21%. They cut the price of their cars. Then they had that whole issue with all the big tech jobs getting laid off. Well, those big tech jobs are the ones who are probably buying Teslas. So it was like they lowered the prices to try to lure people in, but then all the people they were trying to attract got laid off. So that impacted them. Then you had Elon being distracted on Twitter, and you have all the rising competition like Ford and Honda and Toyota and General Motors, and all the companies now have electric. Are you investing as a Canadian? I'm not Canadian. I don't share my net worth. What about AI? I love it, but you have a couple options with AI. One, you can pick a handful of companies. You would have to spend a lot of time researching them to figure out which one is the best or the right one for you. A couple would be UiPath or C3.ai. Those are two very popular at the moment AI stocks. You also have stuff like Microsoft and larger companies that dabble in artificial intelligence. Or you could get an AI ETF, of which there are several. AIEQ, IGPT, Chat is one that's a generative AI and technology ETF. You got options. Seed going to 30. I've never heard of this company. I'm not so sure it's going to 30. It's $2 right now, and it's down 71% this year. Hopefully it happens for you, but I would only put in what I'm willing to lose. This one is called On Holdings, $32 a share, up 38% last year. Year to date, it's up 20%. It offers no dividend, but their grades are fantastic. Valuation is the only thing that they have a poor grade on, F. Probably because it's up so much and it's now overvalued compared to whatever. It's a footwear company. Okay. Valuation is F. Growth A+. Profitability B-. Momentum B. Revisions A. Pretty good growth. It went public in 2021 and it's down 9%. I'm sorry I'm itching my nose so much. I'm allergic to dogs. And we're dog sitting. It has a 1-year price target of $35, and that is around 10% to the upside. There are 15 analysts covering it. 11 recommend you buy it. 3 recommend you hold it. 1 recommends you sell it. It has a low price target of 21, an average of 35, a high of 51. Best monthly income stocks. Check the video I just posted a few days ago. You'll have to go on my page and scroll down a little bit, but it's within the last like 15 to 20 videos. It's literally, the title is monthly dividend. What do you think of Warner? I think the problem with all these companies offering streaming services now is people are going to go to the ones they know. They're going to go to Netflix, they're going to go to HBO, they're going to go to Hulu. Now Warner Brothers, and then there's Paramount and Peacock. It's like, there's too much. Warner Brothers is down 32%. I believe they had a dividend at one point, but it looks like they cut it. Or maybe they never had one and I'm wrong. It's a no for me. It's down 12%. Revenues looked to have skyrocketed massively. They came in at $12 billion in 2021 and then $33 billion in 2022. How did they do that? Suspicious. I'd be weary on a stock that's fallen this much. Alibaba, if I had to pick one Chinese company to invest in, it would probably be Alibaba. Even though it is down dramatically, it's down 29% last year. It's down 5% this year. The only thing that seems kind of interesting to me about Alibaba is that it has a lot of analysts who recommend it. It is currently, it's currently $73 per share. It has a 1-year price target of 105. That's a 43% move. Of the 21 analysts covering it, 0 recommend you sell it, 3 recommend you hold it, 18 recommend that you buy it. Thoughts on SoFi? We've already talked about SoFi. I will be downloading this live and posting it on my YouTube channel later today, where you can go and then rewatch it if you want. I like SoFi, low overhead, no physical locations, keeps things affordable for them. The free guide, this is for Jay Christo, is on my website. It is my name. It's kennethsuna.com. Just go on my website, kennethsuna.com, and you can click on the menu. I can't believe I have to say this. I get a lot of people saying, I looked, I couldn't find it anywhere. The menu is those 3 little bars that are either going to be down here on your phone or up here on your computer. Click on the menu, a page will pop open. You will see my free resource guide, which has every single website I use to do my own research. You will also see my stock fight template, where you can compare 2 stocks by the same sector, and my ETF template, where you can compare 2 ETFs. And it is totally free. There's no email sign up, there's no PayPal, there's no Venmo, there's no Patreon to unlock it. It's just there on the website, and it's yours. How is Crowd doing this year? CrowdStrike or Crowdsource? I can never remember. CrowdStrike is up 184% in the last 12 months, and this year it's up 29%. Who is this? Trade, Invest, Simplify 0 is in the chat, and you are now reported. And you are blocked. Bye. By the way, I will never DM you, so if you get a DM from me, it's not me. Don't give them your money. It's a scam. How do you feel about ARM? This is for Brian. ARM is 126. Year to date, it is up 68%. They just recently went public. It's an offshoot of a British semiconductor. I can't remember who now. It doesn't say, and I can't remember. It's up 68%. I like it. I don't own it. Robin, relax. There she goes. She's going to get some deer. How do you time reinvestments? Thinking about RHM. This is for cats. RHM. I don't know what this is. It's a municipal bond fund. But I time my reinvestments a couple ways. One, I'm always watching the markets. So if I see a particularly bad day, where like the headlines are Wall Street in turmoil and the markets are down 800 points or something huge. I'm not talking about a 200 point down day or, oh, this report made people worried and the markets went down 200 points, 300 points. I'm talking about a real big down day like we had a couple days ago where the markets were down 600 points at the end of the close or in the middle of the day. That's a period of time at which I would say, hey, let me go on my portfolio and see what's getting absolutely hammered today. Maybe there are some deals and I can buy a couple more shares of this or that. Another option for you would be on the first of the month, every month, to just automatically buy in, and you don't really care what the stock is doing. You're not sitting there going, well, I'm going to wait for the most opportune moment. I'm going to wait for the best price. Waiting for the best price will drive you nuts. You'll probably never get it, and you'll end up missing opportunities and driving yourself nuts. And it really doesn't matter what the price is now. You're buying your investments because you're thinking about the next 20 or 30 years or 10 years. So that's another approach. A third approach, you can dollar cost average whenever you want. Some people do on the 1st, some people do on the 15th, some people do on the last day of the month. You can do it a couple times a year. Doesn't matter, whatever is best for you. I agree with you on MO. This is from Miss T, and I think the same with SWBI. Is that the yeah, Smith & Wesson. Smith & Wesson actually has a dividend safety grade of F, surprisingly. And, what's funny too about this, I'm going to try to tread cautiously because I know I have a lot of different people in this live of different political affiliations. But Republicans always use it as a talking point to scare you. The Democrats are going to take the guns away. I don't even know if I can say that in a live. I don't want anyone to report me. And then the gun stocks surge. But Biden's been in the White. Nothing is getting taken away. So they come in, they say, oh, they're going to take them away. The stock prices skyrocket. Then the other team gets in, they don't take them away. The stock goes down in value because people aren't as panicked. Oh, look who's here. Wait, don't go away. Robin, come here. Robin, say hi to TikTok. Oh, nope, she hates the camera. This dog really hates the camera. All right, everybody. Uh-oh. Dropping you. I'm dropping everything. Sorry. My tripod's being difficult. What is going on here? Okay, hello. We already talked about Alibaba. Do you invest in any small cap biotech? No, I don't. Best stocks to invest in 2024 for the next 10 years. Index funds. TSLA, explain my loss from your suggestion. I don't understand. I don't suggest anything, by the way. Just got here. Have you ever trimmed your Meta? Got in at 112, and I'm wondering if I should forget about it. The only time I ever sold some of my Facebook stock was when I had to buy my home, and I couldn't get a mortgage from the bank because I was a stock trader, am a stock trader. And when they asked what I did for a living, and I said I trade stocks, they laughed at me and they said, you will never get a mortgage. So I don't. That's when I sold some. But I wouldn't have done that if I didn't have to. What's the biggest holding in your portfolio in a ton of single stocks, not ETFs? Ford, Apple are my biggest. Ivan says, I just got here. First steps to start trading. Start small. Don't expect that you're going to get a hang of it right away, and learn, most importantly, to cut losses. I think that's a huge mistake new investors make, or new traders. New traders come in and they think, I'm going to make so much money so quickly because the guy on Instagram has a Lamborghini, and if he does it, I can do it. And they just start throwing tons of money in without a plan. Your most important plan is to learn how to have the control and the power to say, I'm out, and cut your losses. A lot of new investors do not do that, or traders, sorry. You have to learn how to master that. It's really hard. You research a stock, you spend all this time learning about the charts and the technical analysis, and you look at patterns, and you're excited, you want to make a lot of money, you want to do it really quickly. You get in on a stock that you've researched extensively and it dumps, and your first instinct is to say, I can't be wrong. I'm going to hold it until it comes back. Wrong. It can drop 20, 30%, and you've tied up all your money. Now you can't make other trades. you take a 30% loss and you say, hey, the stock market sucks. So first, start investing. Investing number one. You have to get that foundation of a good, solid, long-term portfolio. Once you have that, then you can look into trading if you want. Paper trade, that's using fake money through a brokerage. It's just like a game. It's not real money. Paper trade with the amount that you plan on really trading with. Don't trade with $1 million if you're not going to trade with $1 million in real life. If you're going to trade with $500, paper trade with $500. Toady, Palo Alto, Palo Alto, PanW. It's $365 per share. In the last 12 months, it's up 114%. Year to date, it's up 23%. Really strong grades. Growth B+, profitability A+, momentum A+, revisions A. The only bad grade they have is valuation is an F. It just means that it's a little overvalued when compared, or it's very overvalued because it has an F, to the overall markets or the overall sector, which comes in at 25 times earnings, and Palo Alto is 66 times earnings. So it's extremely overvalued. It doesn't necessarily mean that it's going to go down, but if they were to have a bad earnings report, it could. It also could mean that investors are willing to pay a little bit more now because they think this company is going to do so much better in the future. It has a 1-year price target of nothing because it's not pulling up. Here we go. It has a 1-year price target of $356, which is already surpassed because it's now $364. Their next highest price target is $450. There are 34 analysts covering the stock, which gives me a lot of peace of mind. There's a lot of interest in the stock. Of those 34 analysts, 0 recommend you sell it. 4 recommend that you hold it. 30 recommend you buy it. That's pretty strong. If I have a rollover, do you mean like the backdoor Roth IRA in which you? This is for Jasmine. Are you rolling over your Roth IRA from another account, or if you? You're saying, or do I need to get a Roth IRA or a traditional? Depends on your income. If you make $161,000 or more this year, you would open a traditional Roth IRA. If you made under 161, you would open a Roth IRA. I've also heard from a friend of mine on this app who's recommended, she says, really if you're making 120 or 130 or more, just open the traditional one anyway. Because if you're already making that much money, it's likely that you're going to keep making more money. You're going to keep getting pay raises. And pretty soon, you're going to surpass the income requirement for the Roth IRA. So in that time, just, if you're already making 120 or 130 a year, to just go ahead and open the traditional. What are you buying and what are you selling? Nothing. Do you think we're on a bull run? Yes. Artificial intelligence, I like it. What do you think about Big Lots? I don't know anything about Big Lots. Mr. Mike Lightning says, Tesla, explain my loss from your suggestion on August 1st. I don't make suggestions, so I don't know what you're talking about. What do you think about HYGG? Never heard of it. HYGG. Hyperion Global Growth. Oh, it's a fund. HYGG. We're also at 11 o'clock now, which means I got to wrap this live up pretty soon. I see nothing about HYGG. I'm sorry, I don't know. Do you like Rivian? Yes, but I only have a very small position in it. Only what I'm willing to lose. Payo, I've never heard of. Payoneer Global. It's $5. It's a penny stock. It's down 4% last year. It's up 2% this year. I don't really mess with penny stocks. Hello, TriStem. Hello back. What does your subscription include? Don't buy it. I can't turn it off. I used to have a subscriber only live. TikTok takes 50% and the other 50% goes to the App Store or to Google. No, I'm sorry. TikTok takes 30%. 50% goes to the App Store or to the Google Play Stores, whichever app you're paying through. So I get nothing. It used to be I wasn't getting any brand deals, and I was thinking if I don't get brand deals, I can't stay on TikTok full time. I'd have to go back to trading, which means less content. So I decided I would try doing subscriber only lives. TikTok and the app stores ended up taking most of the money, and I felt weird about it. I don't like doing that. So I tried to disable it. I've emailed TikTok 30 times. Please turn it off. Tell me how to turn it off. They say contact us. I've contacted them. I can't turn off. Don't subscribe. Look at CHNR, I already did. What do you think is going on with it? I don't know what that's in reference to. Tody Virtual, you are very welcome. Dividends in general, I don't know what that comment means. I love them. What do you think about Trade Desk and their earnings report today? I think their symbol is TTD. It's up 49% last year. It's an advertising agency, I think, which sounds misleading. The Trade Desk sounds like it's going to be stock trading, but it is not. TTD has a 1-year price target, according to the analysts, of $79. That's a 6% move to the upside. 11 analysts are covering it. 1 sell, 1 hold, 9 buys. What do you think about Realty Income? What's going on with Realty Income? I think a lot of people are shifting their money this year. They're looking at Realty Income. They're looking at the rising interest rates. They're looking at the mortgage rates and stuff like that for housing and homes and stuff like that. They're also putting their money into tech, which is massive growth right now. So they're not looking to earn a measly 5% in a dividend when they can put their money in super microcomputer and make 900%. So I think a lot of people have shifted out of dividends and into high growth, and it'll shift back. It doesn't really worry me. Realty Income is going to be around forever. Super micro is the one that everyone's asking about in today's live. I've asked about it almost a dozen times probably. Talked about it already. I'm downloading this live. I'll repost it on YouTube. There are over 100 questions I'm probably not going to be able to answer today. What site do you use? Coco, if you're still in here, go to my website. It's kennethsuna.com. Click on the menu, which will be down here on your phone or up here on your computer. There's a free resource guide. It has every website that I use to do my own research, and it's totally free. Why do you have multiple accounts with the same name? Those are scam accounts. This is my only account. This is for Casey. I hope you're still in here. They are all scam accounts. There are thousands of them. I report every single one that I see, and TikTok always writes me back and says no violation was found. They are scammers. They will DM you. They will try to talk like me. They'll say, hey, how are your investments going? People then DM me, am I talking to you on your backup account? There is no backup account. There is no secondary account. I will never DM you. Don't fall for it. Some people fall for it. Good morning. Hello. Who's best, Republicans or Democrats? Well, if you go by the NANC versus the KRUZ ETF, NANC just crushes them. And NANC isn't just NANC, isn't just Nancy Pelosi's trades. They're just calling it, at the time, the most popular politicians that were, Nancy and Ted Cruz. So NANC is Nancy, but it isn't her trades. It's all Democrats. And KRUZ, not C, KRUZ is the Republican one. And it's all the Republican trades. Nancy is up 29% last year. KRUZ is up 12%. Capital Trades is cool. Yes, Capital Trades is a great website. HYGG, I'm sorry, I don't see it. Thoughts on SMCI, thoughts on going higher? Your guess is as good as mine. I'm sitting it out. At a certain point, I look at a stock that's had such massive growth, and I go, not chasing this one. Lucid, I'd only put in what I was willing to lose. Real question, what is your portfolio size? I don't answer that. Okay, caught it all. They already tried to scam me. I know, I'm sorry. I wish I could do something about it. It's really aggravating. I can't imagine how it feels for people who follow me. The first time you follow, by the way, there's going to be a lot of new followers here today who are in this live. As soon as you follow me, you are going to get 12 to 15 fake accounts of mine following you back. I never follow anyone back for the sole purpose of saying, if you see a Trade Invest Simplify following you, it ain't me. Everything is going down today. Do you know the reason? Yes. It was something about, let me see here. Retail sales tumbled 0.8% in January, much more than expected. I don't own any closed-end funds. Crypto I own and I invest a lot in. Alibaba we've already talked about. I'll be downloading and posting this live on my YouTube channel later today. Opinions on crypto, I really only just focus on the big ones. And then I have a bunch of smaller ones in, HBAR and VeChain and Polygon and Matic and blah, blah, blah. Are you selling any calls on stocks? On stocks that you own? Generally, no. My price point on the stocks that I've bought and held for the long term are so low that I don't want my shares to be called away. Number one, I'll lose that low price point, which means I'll have to buy the shares back at a much higher price now than where they were. Number two, I don't want to pay taxes on getting my shares called away. And it's just not worth it. I bought WWE in 1999. I bought Apple in 2003. I bought Meta in 2012. I bought Tesla in 2016. And so I might be able to generate $100 from each one in covered calls, or, a couple $100 or $80, depending on, how many shares I own. It's not worth the risk to me that I'm going to lose those shares. So no. NVIDIA will be the largest company soon. That's entirely possible. SMCI, we've already talked about. Do you use Schwab instead of Robinhood? Yes, I think Robinhood sucks. I prefer a much more established brokerage like a Schwab or Fidelity. They have a chat feature where you can go on and say, hey, how come this happened in my account? Or can you explain what this means? Or I saw this in my account, or what does this term mean? And they'll respond right away. You don't have that with Robinhood. So people will write me and go, hey, how come my dividend didn't show up in my Robinhood account? I don't know, and neither do you, because you can't ask anyone at Robinhood. SMCI, we've already talked about it plenty. How much was your house? It was a lot. Ian Rowe, let me see if I can find a comment here. Love the green colored walls. Thank you. This is not my house. We are dog sitting. What's better, to put money in a CD or investing in the top mutual funds? Daisy, a CD is not really an investment that's going to help you retire. As soon as the Fed cuts rates, which you're going to do this year, those CDs are going to come tumbling down. High yield savings accounts, they're going to come down as well. Saving is not investing. CDs are great when you're old and you've made your money and you want to just make a little bit extra. You know who buys CDs? My mom. My mom has a lot of CDs. She'll call me all excited. Oh, they put me in one for 4.3%. And she's very happy about it because she's made her money and she doesn't want to then put it in volatile stocks. So even though she has stocks and she's investing in stocks, the majority of her money now is in safe, boring investments like CDs and bonds. If you're young, you don't need them. I would rather put that money in the stocks any day. All right, everybody. I'm sorry. I'm going to... No, I do not send info out on Telegram. I don't have a Telegram. AFG Baba, any REITs? I don't recommend stocks, but I have a whole playlist on REITs, so go check it out. All right, everybody, got to go. I'm going to wrap this live up here. I will be back on Sunday at 10 a.m. It is the most popular live, so come in early with your questions prepared. I don't wait to invest. This is for Nathan. I don't wait. What's the point? You're not investing. A recession could come tomorrow or it could come in 3 years. You don't know. Just average in. Why do you sell a course if you're profitable? I don't sell a course. I have no course. Never sold a course. That's why I built this account. To say, I don't sell a course, and I never will sell a course. I never have a one-on-one. I never have a paid Discord. Nothing like that. Totally free. Everything on this account is free. So I'm not going to say your username, but there's no course here. This guy, you didn't even do your research. You just come in and you see a stock person, you assume they all have courses. I'm offended. This guy is spamming my chat. Why do you sell a course? 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 Man, you've asked it 5 times and then you left. You didn't even stay for my answer. Baby. Daisy, the best way to invest $100,000, check the playlist on investing by amount. All right, everybody, I got to go. I don't sell a course. Oh, you're here. I don't sell a course. So thanks for spamming misinformation about my channel. But I don't sell a course. Now what are you going to say? Now what's your response to that? Hey, hard hands. Usually when I say don't sell a course, someone then follows up by saying, well, at least I have all my hair. So I'm going to wait for a comment like that. NFTs, I wouldn't waste my money in. Great content. Thank you so much. I appreciate it. I don't sell a course and I never will. All right, everyone. Thanks for watching. Have a good day. Didn't mean to do that. How do I end this thing? Bye, everyone.